It's not done, and I'm recording. Just had to tell the wife I was recording. How you doing, folks? It is the end of the week. It is Friday, August 7th. Is that right? August 7th. Wow. Time just goes. And when it hits August, I always feel like everything's downhill from there. That means that the summer's coming to an end, but not until we do our annual vacation. All right. Today's video, I titled it The Top 3 Option Strategies to Use Right Now in This Market. What is so different about this market? Seriously, what is different about this market? Besides the fact that we still have a pandemic, we are still acting like there's, I don't know what we're acting like. I mean, there is basically a divided country on how we're acting. There are those that have hope, and then those that hope that we don't have hope. All for political reason. How does that affect the market? Well, so far, it hasn't affected it at all. We have had what you have to admit was a V recovery. I watch CNN or CNBC or Bloomberg or any of the others that are talking about the economy, and they say, well, this wasn't a V recovery. However, I look at the charts and, man, it looks just like a V, unless there's another letter in the alphabet that it's a V. And now, to explain that, how do you explain that? You explain that by the what the market actually is. The market is a forward projecting device. It's a mechanism that looks to the future and says, in the future, we believe that the market's going to be here. And so we're going to price in the market the way we believe it's going to be. So that's what happens. So from that, you can ascertain that the market believes that we're going to be heading into better times. And there's good evidence for that. You look at the jobs report. The jobs report today was another spectacular jobs report, better than the consensus. Every single jobs report since the bottom of this market on, I think it was March 23rd, has been better than the next. And not just a little bit better, a lot better, and way better than the economist or whoever is actually coming up with these consensus arguments for economic reports. Who are these people? Because they do exactly the opposite of what the market does. They are more pessimistic. The market is usually more optimistic. So the reality is it's somewhere in between. The market always overstates where volatility will be, and that always comes in a little bit under. Now, volatility right now is still, at least from a near-term historical high, or historical norm, is very high. That is, if you just sort of measure the last dozen years or so, volatility is still really, really high. But from a long-term historical perspective, volatility really isn't that high. It's a little high, but it's not outrageously high. But it is high enough. It is high enough that we're provided with a nice situation. A nice situation if you're a trader. First of all, we need volatility in order to extract profit from the market. Without those peaks and troughs, without the expectation that when we buy low that we can sell high, or sell high and buy back low, then there is no reason to invest or trade. But we have that. Or it's very difficult to. You don't know if we're going to go on this, this long, elongated rise up or rise down. And so you're taking incredible risks. Most people don't want to take those kind of risks. So more volatility Not too much, but more is better for the market. It is embraced by the market. Our market is naturally anti-fragile. We like volatility. It is the lifeblood of everything that goes on. So you came here wondering what the 3 top strategies were. Well, instead of talking about specific option strategies, like a credit spread or an iron condor or a butterfly or a I don't know, what are the others, a jade dragon or a pearl mumbo. Who the hell knows what other strategies are out there? But there are combinations, or what we call multi-leg strategies, that are relatively complex that you have to put on, that are supposed to be designed for very specific market types. Now, that is assuming that we are all smart enough to be able to put on one of these things and be able to predict that the market's going to stay within this range, or it's going to go up to here and then take off, or it's going to come up there and then sort of drift off, or it's going to... You don't know. The best I think that we can do is just sort of guess at an over-under. Will the market stay above this level for some period of time? Will it drop below within some period of time? Those are simple notions, and they're easy to grasp. So the first strategy that I want to say, if you want to win at options in this market, is to simplify everything. First of all, these multi-leg strategies don't have a high probability of profiting, and they are expensive to put on. When you have to put on 4, 6, 8 different legs in a strategy, and the possibility of then adjusting if it doesn't work out for you and you want to try to save it, which can also be very problematic if you don't know how to save it. You're not going to get the kind of return on capital that you were hoping. And hope isn't a strategy. So the first strategy is to keep things simple. Either just trade a naked put or a credit spread. You may be saying, well, why aren't you talking about maybe going long or going long on a call or a put? Because that is pretty much the worst thing you could do. And that is pretty much what most people think, that's what they have to do. They have to guess direction. And when you try to guess direction, you're almost always wrong. Even if you're a little bit wrong, you'll be wrong. You'll also get bit by the contraction of volatility if that happens. So trying to guess direction with a long call or a long put simply isn't the answer. So that's the second strategy. Don't think that you can outguess the market. Don't think that you have superior information that's going to tell you which the way the market's going to go. It's no different than if you just picked a stock, where the only way you win is if it goes in your direction. Everything else is a loser. If it stays the same, moves down, you're done. So that's the other thing. Simplify. Always simplify. Some other things. What's the opposite of going long on options? Well, that would be going short. And basically going short means that you're a writer of options or a seller of those options. When you're a seller, you give up your rights and you have obligations. As a seller of, say, a put, selling a put, although some people consider a put a bearish strategy, when you sell it, it's the opposite of buying it. It's kind of a bullish strategy, and it can be. It's kind of a neutral, I can be wrong a little bit, to bullish strategy. But it's really a strategy that's saying that I'm going to put insurance on the market on this particular asset. And that insurance is going to pay me. It's going to give me some income. And the insurance is that the market will stay above a certain level. And if it does, I get paid. I get paid regardless. If it comes down to that certain level, I have to be willing to buy the stock at that level. So think about that. You, as a stock picker, have no choice but when you buy stock to buy it at the going price that it's at right now. If you could, you'd love to be able to buy it at a lower price, but there's no guarantee for it. You could put in a limit order and wait for that to happen. But then when you put in that limit order, all you're doing is tying up a bunch of your money in your account and waiting for it to come down, which it may never do. So you've tied up that money and you've lost. You've lost time, you've lost opportunity. If you sold a put, you could put it at that level where you think that it's going to be, where you would like to own the stock. And if it never comes down there, you still make the money. Because you're the insurance provider, you're the casino, you have essentially given that opportunity for someone else to use your put. You get paid for that. And if it does come down to your price, then not only do you get the stock at a price that you want it at, but you get it at an additional discount from the premium that you've collected. I mean, what is better than that? Getting a stock that you'd want to own at a discount. And if you don't get it, you still get paid. It's like a duh moment. Why somebody wouldn't do that is beyond me. Why someone who is buying stock wouldn't always short a put. Always. And you could do it over and over and over and over again. All right, so that's another strategy. But there are some issues with selling naked puts. And probably the biggest issue is the cost. It ties up a fair amount of your money, and you need to have in your account enough cash should that stock go way, way down. So it'll be a requirement that you have enough cash to cover a very large drop in the stock. And so for that reason, for people with small accounts, it's not really an option. The next best thing, so what they're saying is that, look, you need to have a bunch of cash to take care of these tail risks. Tail risks are things that are outliers that probably won't happen, but if they do, you need to be able to do that. So while the naked put is a great strategy, it's really meant for people with larger accounts. Now, if you're a small dog, let's say that you only have a couple thousand, 3, 4, 5,000, you could still practice this exact same strategy, but instead you could take the tail risk away by also buying a put. So you sell a put and you buy a put. Now you still have that credit situation. You still can buy the stock if it comes down below your price, but now you don't have to worry about the tail risk, and the cost of putting that put on will be much less. It won't tie up a lot of cash. The only caveat to that is that you're limiting the amount that you can make. Now here's the okay, so there's another strategy. Here's the thing. Here's the third strategy that I would like to talk about. And that is, do you have goals, or do you think that this is a process? Are you looking to what are you looking to make? Do you think that you're going to make, I don't know, how much do you think you'll make in a week? Do you think that you're going to consistently bring in maybe 1% a day or 5% a week or whatever? Or are you just looking, are you looking for income, or are you looking for that big score? What is it that you're looking for? Most people are hoping for the big score, but they want to choose consistent income. And but the way they go about it doesn't provide that possibility at all. And that's because they choose strategies that have way too much risk. Their probability of profiting is low. They think that they can beat the system through some special technical analysis or something. And so they'll rack up maybe some wins, but then some losses that usually offset it. They trade too much, they trade too big, and then they lose. But would you be, now, okay, consider that. And I know that some of you have been out there where you've made a big score, and you were happy, and you want that feeling again. And maybe you'll get it, and maybe make some good money, but then you always give it back. Always give it back. So the third strategy I have is that you should be focused on high probability strategies that take a little bit out at a time, a little bit out at a time, a little bit out at a time. And if you do it consistently, never take a loss, always take a little bit out, then you can start achieving some regular income. And it's not out of the question to do that maybe and accumulate maybe 3, 4, 5, 6% a month doing that with super conservative strategies that have maybe 85, 90% probability of profit. Put them far enough out of the money that you can collect that little bit at a time and accumulate it. It's not exciting. You're not making a lot, at least in what appears to be in the short term, but what you're doing is you're creating a machine. You're creating what Albert Einstein called the most wonderful or most amazing thing in human history, and that's the idea of compound interest. If you can do, say, even just 3% a month, which doesn't sound like a lot, 3% a month, what will that do for you? Well, in about a year and a half, it will double your account. A year and 3/4, it'll double your account. If you did 6% a month, you could double your account every year, every 11, 12 months. Just 6%. And that's not hard, not real hard to do. I'm not going to lie to you, it's not easy either. You have to have discipline. You have to have a good strategy. You have to be able to follow these top strategies that I was just talking about. And you have to do what most would consider, not a glamorous trading activity. But you could do that. See, that's exactly what we do at this thing right down here. Asymmetric advisor options. That's exactly what we do. Now, how are we different? There's a lot of scams out there, I'm going to be honest with you. And they all fall short in the ways that I'm going to tell you that we excel. So the first thing is that we don't try to hit home runs. We try to hit lots of singles. We are not an exciting service. It's more like, watching paint dry. but it will accumulate over time, and again. We have everything out there exposed. You see me trading my real live account. And by the way, I just took the first broker statement, and I'm going to post that inside the website, the membership area. So you see exactly what we're doing. We don't hide anything. There's complete transparency. So that's another thing. The third thing we do is that you get actual live support. And when I say live support, in about half an hour, a little over half an hour, I will be doing a webinar that I do almost every day on a particular topic. And that webinar is live to all the members. They ask questions, we go through problems, we work in and out, and then I post that to an internal repository where people can watch it at any time that they want. I am in our trade room every day, all night, available live. I give my clients, my subscribers, my phone number. They can email me as well. They can call me. I'll do live streams. I guarantee you there is no other service that does those things. Period. End of story. We show our results. I trade a live account in the room. I give live support. And most importantly is that we're winning. I mean, what would all that be if you weren't making any money, right? Now here's the kicker. That right now, it is super cheap to get in. I just started up the service a couple months ago, and trying to build up, some people. We've got about 100 in there right now. I'd like to get a couple of hundred. And I'm going to keep this price low probably through the summer until I get back from vacation. And then it's going to go up. And you'll hear a lot about us in the future. You'll be able to go to, tradingschool.org, who does reviews of services. And virtually everybody that they review, they show are scams. And they show that they're scams for the exact reasons that they don't do what we do. We trade live accounts in the rooms. We provide live, hands-on coaching, mentoring to students. I publish the results in the room for everybody to see. We win, and it doesn't cost a lot of money. How can you lose? Seriously, how can you lose? Go down below, sign up. We'd love to have you there. So I got to go now. I got to get prepared for the webinar that I'm doing for the membership, which I do almost every day. And we also have a weekend webinar. All of this is included in the price. Let's see, we have a couple of questions. Do you think Apple splitting its shares will be a good thing? Is that really bullish? Apple first split their shares several years ago because they felt that the high price put it out of the reach of other people. Are they worried that they're not getting the kind of liquidity that they need right now because they're priced out of the market for some people? The whole notion is just ridiculous. I don't think that splitting their shares is good or bad. It's just a thing. I think it just I don't know why a company choose. Berkshire Hathaway has never split their shares. Of course, that definitely puts them out of reach of some people's ability to invest in them. But Amazon, I mean, look at it. It is so high. So I don't know. Maybe it's a good thing. Maybe it will bring it down low enough so that the Robin Hoods and the Weebles can have a better time of it and provide more access to that sea of people that have no idea what they're doing. I just see it as more opportunity for people to get scammed. Not that Apple's scamming people, but just the lure. Do your option strategies have anything to do with Dragon Portfolio? Dragon Portfolio is something completely different. That is, Dragon Portfolio is a bigger picture look at your overall portfolio and how you allocate things and do it in such a way that makes your overall portfolio recession-proof. What we're doing is, this would be like a portion of the Dragon Portfolio where we invest and trade in equities and build up income in it consistently. The rest of a Dragon Portfolio is sort of a static portfolio for the most part. I'm 40 next year. I'm looking to grow something in the next 20 to 25 years, so I've got something that comes at retirement age. That's damn good goal. Well, here's the thing. There's no secret sauce in what we do. It's really more training and developing the discipline and just a few strategies and being focused. And that's what we provide here. We help you develop really good habits that you'll be able to take and use for the rest of your life. So it's not inconceivable that you could spend, say, 2, 3, 4 months here and then say, hey, Ernie, I don't need you anymore. I understand that. But for the most part, I believe that people will stay with me, as people have stayed with me for years on all my services because they trust me. Now, I'm not saying that I'm not selling myself out and say you must trust me to come in. I'm saying that I need to develop that trust with anybody new, but that's why people stay. Because they're getting a good thing, they feel comfortable, they're making money. All right. I need to go now. I need to work on this webinar. Thank you very much. We'll see you next video.